Jo from Harcourts, and we know in the next 12 months around about 50% of people will be rolling off their fixed mortgage rates. So it's timely. We're here with Kevin Burrows from Mortgage Express to talk about what's happening with interest rates.
Yeah, thanks, Jo. Look, that's a bit of a concerning fact when clients have been used to historically really low interest rates back in 2022, 21, with sort of 2 and 3% interest rates being available. It's important they understand where the market's at today, with interest rates having increased quite significantly in the last 12 months, and then start to look to get a strategy so that that it's going to be manageable for them when they come off these rates in the next 3, 6, 12 months' time.
It is, and so where do you see things going?
Well, I think probably the good news there, and it's important that clients take that on board, is that we've had a rapid increase in interest rates in the last 12 months. It's looking like, from what we're seeing out in the marketplace and sort of economically, that maybe we're nearing the peak of those rates. So it's really important to then be considering how long I then look to refix for that next period of time, to maybe then pick the next drop, which hopefully we might see in the next 12 to 18 months.
So if I was looking at how long, what advice would you give?
Yeah, look, here in Christchurch, we're typically having clients at the moment refixing for between 1 and 2 years. So look, we see that peak in interest rates probably sometime in the next 12 months. And that gives them a bit of protection to get through that and maybe see a drop in rates over the next 12 to 18 months, and then be in a good position to be able to capitalise on those cheaper rates if and when they come. It's all about predicting the market, but that's the best guess we've got at the moment.
Absolutely. And what other advice can you give?
Because of the nature of where the market's at the moment, I think clients all need to be getting good advice about what's going to be right for them. Everyone's situation is different. So look, instead of just accepting what they maybe have been offered from their existing banks, it costs nothing to get a bit of a second opinion from a mortgage advisor. And look, we're all very experienced, so we can sort of help them through that process to make sure that what they're getting is tailored for their needs, and hopefully is best suited to maximise that opportunity for them.
So no downside really to talking to a mortgage advisor just to get a second opinion. Yep. What sort of things do you actually look for in whether or not they're getting a good deal?
Yep. Well, look, that changes day to day. We've had a classic example of that in the last 3 to 4 months, where the nature of a slower property market has meant that the banks are lending less, and that's a real problem for banks, because at the same time as interest rates have gone up, they've got less demand for borrowing, but they've got more demand for investment. So people are all rushing in and taking out term deposits. The banks are now flush with money. They've got to get that out into the home loan market to get a return on that money. So in the last 3 or 4 weeks, we've actually had the banks come out to the mortgage community offering these below the table discounted interest rates to try and bring in some quick borrowing to balance their lending book. So they've gone out to the mortgage industry, because we're now writing about 60% of all new loans. So when the banks are looking to get some quick business, that's where they know they can get it from. So look, those clients we're working with at the time benefited from those cheap interest rates. They've now gone off the table while the banks are now actually processing those loans and getting them settled. But given where the market's going, I highly expect that they're going to come back into the market again in the next month or two. So it's about being in the right place at the right time.
Okay. And if I was having my mortgage roll off a fixed rate, what sort of timing leading up to that do I have the option to consider?
Yep. Well, I think the first point is sort of being aware of where the market is now, and not sort of having taken on a cheap interest rate 2 years ago and sort of not kept track, so you're aware that you've got some decisions to make. We can refix or book the new rate up to 60 days before the interest rate maturity. So it really is probably a good idea to be talking to somebody at least 3 months before the fixed rate maturity. So you're getting some advice, you can work out what you want to do, and then we can sort of jump in and secure those rates as soon as that window opens.
Excellent. Mortgage Express is a Harcourts affiliated company, and I thank you very much, Kevin, for coming in and talking to us.
Thank you.